Is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good day from TFNN. Welcome to the September 30th, the magical, the magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hope you had a great weekend, and welcome back to these markets out here. Hey, this show is coming to you live at 8 a.m. in the morning. It's 8:07. We're going to try to make today's show as pertinent as we can to those of you listening from 1 to 2. And thanks so much for doing that. We'll be back to normal programming tomorrow morning out here. Hey, I'd love to hear from you. If you happen to be listening, you can give us a call at 877-927-6648. If you can't call in and you're listening between 8 and 9, go ahead and send me an email, steve@tfnn.com. I'll be happy to go ahead and take a look at your request out there. Of course, in our Tiger's Den, well, any and every ping will do. So let's go ahead and get this show started on magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So right now at 8:07 in the morning, we've got all of the U.S. equity futures pointing higher. The Dow is up 69 points, the S&P up 9, the NASDAQ up 33, and the Russell up 3. Overseas, we've got a mixed bag. If you just start with Europe, right now the FTSE is off 19 points. That's 0.25%. And the DAX is up 0.1%, 12 points to the upside. If you take a look at Asia, it was a mixed bag there. The Shanghai was off 28, nearly 1%. The Hang Seng was up 137%. So there's your just having a little brain fart here. The Nikkei is up 123 points. What was I trying to say? Geez Louise. In any event, we're going to skip right over that and go right to Australia, which closed off about 0.5% or 27 points to the downside. Of course, the news of the morning right now, you've got Goldilocks testing key levels of support. It's trading right now at $14.92. That's off $14 and change. We'll take a look at that for sure. I'm sure that folks have a question about that. If we take a look at silver, it's down over 2% or 38 cents, trade out at $17.27. Light sweet crude off 50 cents, half a buck, trade out at $55.41. Natural gas off 3 and nearly 4 cents, down about 2% to the downside. U.S. Treasuries kind of flat, off 0.25%, down 12 ticks on the 30-year bond. U.S. dollar index is to the upside, trade out at around 98.95. I say around simply because I have a 10-minute delay. So let's go ahead and begin by taking a look at, so this today, it's a beautiful thing. Of course, it's always a beautiful thing. But today's a end of a month, end of a quarter, end of a day. So we got 3 of the 4. So let's begin by taking a look at, the ES Mini out here. Let me get that up on our screen. Let's take a look at the S&P 500 futures contract. And in the upper left-hand corner, folks, you're going to see the daily time frame. Upper right, you're going to see the weekly time frame. Lower left, the monthly, and the lower right is going to be the quarterly. So let's just start with our longer-term period first. Let's start with the quarterly over on the right-hand side of the chart out here. And here's what we know. Last quarter, the quarter that ended on June 30th, we saw a close above the top of that quarterly profile. The quarterly profile level is 28.92. In order to generate this, we're using Stevie's synthetic contract out there. Trading line price-wise with December out here, but it gives us a nice way to stitch together all the prior future contracts, taking into consideration previous TAS market profiles, and we use these market profiles to help us identify support and resistance. Once you close above resistance, price should move up to the next level. Could be a larger time frame, would be one of the next levels. If you're trading below the bottom of a box, that would suggest that you would trade to the next downside level. Well, in the case of the ES Mini, for its daily time frame, what I want you to focus on and pay attention to is the bottom of that market profile. That level is 29.64 on my screen. It'll read 29.64.68 so that you're following along here. The ES Mini can't trade to that level, so we'll use 29.64.50 as the level that price must close below to generate some type of change in trend signal. Now, that's looking at the daily time frame. The weekly time frame says not so fast. In order to generate any kind of change in trend signal, you need to close back below resistance. Resistance was, and it may be, support at this stage of the game, 29.50. And what we can see here is back during the week of, let's come back here, the week of September 2nd, we had a close above that level. Last week was a test of that level, again, that level being 29.50 out there, which has hold. Now, the last time that we saw on a weekly basis, price closed above the top of the resistance level, or the task market profile, was back here in July. So we saw a move above that in July, and then on the month of, the week of July, what am I talking about? It's a weekly chart. July 1st, to be very specific out there, the week that began July 1st. But the week that began July 29th, we saw it close back below the bottom of that profile level, again, the 29.50 area. And then what did price do? It moved all the way down to test support, moved lower than that, but by the end of the week, it closed above the support level of 29.64. So we have 29.64 as a support level on a weekly time frame using Stevie's synthetic contract. We have that's 28.64, and 29.64 just happens to be popular. So 29.64 on the daily, 28.64 on the weekly. So if price were to close below 29.50, the same outcome is likely to occur, which is a test of that weekly bottom of the box, 28.64. Now, we're not there yet. We are not there yet. We may never get there. If you take a look at the monthly time frame chart, it is bullish, trading above the top of the monthly profile at 29.06, and the quarterly very bullish as well, with the second quarter close, it looks like, above resistance, 28.91, old resistance perhaps becoming new support. So that's what's going on inside the ES Mini. The other thing that we're watching for inside the ES Mini today specifically is whether or not the ES Mini will generate a TD setup 9 count. Now, normally, you might say, when I say what I'm going to say here, how can you say that? Well, say it already, Steve-O. The most bullish thing that the market could do today is close lower, specifically inside the most bullish. Did I say the most? Let me just maybe it's early in the morning. Sometimes the thoughts in my mind and heart don't really come through the vocal cords. The most bullish thing today is a lower close inside the ES Mini. And that lower close would be below, well, let's give you the exact number out here, 2970.25. You need to see a close below 2970.25. The reason I say that that would be the most bullish thing is because that would then go ahead and complete a TD setup 9 count pattern. On Friday, the ES Mini went to a lower low. That was bar number 8. You need the lower low to occur on bar 8, 9. Today would be 9, or bar number 10. Well, if the ES Mini closes above 2970.25, there will be no bar number 10. There will be no bar following bar number 9. So, yes, if you're bullish out there, you want a lower close today. Something below 2970.25, and preferably above 29.64.68. Could just be a tight trading range day. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So the good news over the weekend, we had a new moon come in and no war that broke out over in Iran and Saudi Arabia out there. So that's always a positive thing. No war, so to speak, although there's literally... But well, I don't know the number of wars that are going on right now across the world, but there's plenty of them. Whether they're war of words, war of thought, or actual physical wars, they're going on. If we do take a look at what also occurred over the weekend, we had the perigee lunar phase come in. Now, that's the point in time. This was Friday night, late Friday night, when the moon is closest to Earth during the current lunar cycle. Now, what I like to do is I like to denote the actual price point of where the equity futures contracts are trading at when that pivot point or that lunar point occurs out there. In this case here, the markets were closed. So perigee came in at around about 10-12 in the evening on Friday. And so the question is, what does Stevie use for the so-called pivot point, support or resistance level out there? And the only way I've been able to figure this out is you've got to use either the close of Friday or the open of Sunday night. And that's what you're looking at on my screen out here. In the ES Mini, the close of Friday was 2968.50, and the open on Sunday was actually, I don't have the open up there. I've got the bottom. My apology. Early in the morning, there we go. We'll get it up to the bottom, 2976. Same thing here. Sorry about that. I was trying to do two things at once, and I proved that, well, I can't do that. Actually, I can. I'm doing it right now. So now we've got the pivot points out here. So in the ES Mini, is it 2976 or is it 2968.50? I'll go with the 2968.50 there. Inside the NQ, what's the level I'm watching? 77.17. And inside the Dow, which is being tested as we speak right now, is the 26.843. See how the Dow has tested this level of support ever since 6:30 this morning. So it suggests to me that it's the Friday close, which would make a lot of sense because the pivot point or the perigee lunar phase coming in just a few hours, a handful of hours, if you will, after the market close out there. So it does look like the close of Friday 29.68, 77.17, 26.843 for the YM, and 15.25.90 for the Russell 2000 are the levels to be watching there. Look, when price is trading above or below those areas from a short-term standpoint tells you whether you should consider being long or short. But you and I have to look at other elements that are out here as well. And we began by taking a look at the daily, weekly, monthly, quarterly timeframes for the ES Mini. Let's do the same thing out here for the NQ. The ES Mini really is the easier. The ES Mini is the easier of these two contracts to provide us with signals. And the reason that I say that to you, share that with you, is because you'll see when the NQ populates here that the bottom of its box is 73.2748. We're trading at 77. 34 right now. So that's, if my math is correct, 400 points to the downside before it could possibly test a level of support, the bottom of its profile out there. And so kind of hard to make that the call. Now, the ES Mini is much more bullish when it comes to the market profiles versus the NQ. What do we mean? Well, remember the NQ or the ES was trading above its weekly profile. In the case of the NQ, it's trading right at the bottom of its weekly profile, which is 77.11. The low of today has been 77.05. So far that level was tested and rejected. Friday, the actual close on Friday was 77.01. And again, the bottom of that box is 77.11. So it was just a slight close below the bottom of the box. A second weekly close below 77.11 would suggest that 73.27 is on board here. Prices below the bottom of the monthly, or below the top of the monthly profile. That level is 77.25. Yet on a quarterly basis, things are bullish. Second monthly close above the top of that quarterly profile, 75.54. Let's not forget we are now coming into, if you will, the beginning of the favorable seasonal cycle, the true Santa Claus rally, if the seasonal cycle patterns are going to kick in. If we go take a look at the Dow Equity Futures contract, the Dow Equity Futures contract, why? Yeah, I mean, I can't do this for the Russell. You may ask why. And it was because they changed the symbols on the Russell, and I can't go the RTY, and when I try to stitch my contracts together, there's still not far enough data going back to generate the monthly and quarterly profiles out there. But inside the Dow here, the key level for the Dow, the YM, is going to be the bottom of its profile, which has sort of been tested, but not exactly. That level is 26,642. So inside the Dow, we have nothing more than a consolidation between resistance, 27.2 and 225, and or 224, and support 26,642. In the case of the weekly time frame, price is sitting right at its point of control. The point of control is the price point, which is 26,836. We're both buyers and sellers for a weekly time frame. Believe there's fair value, but nothing broken here, but no breakout, no breakdown either. For the monthly time frame, the Dow Equity Futures contract is bullish. Bullish because price above the top of that profile. That's 25,929, and in the quarterly time frame, price above the top of that profile as well, 25,856. So everything here for the four equity futures contracts really still in bullish mode on the larger time frames. Consolidation mode, perhaps, not perhaps, but on the shorter time frames, in some cases the daily, and the weekly time frame charts out there. And that's what's going on inside the equity futures contracts. Okay, so what are we going to look at today? What are we going to look at today? Oh, by the way, with regard to the TD setup 9 count, the ES Mini has that pattern in play. The NQ does not. Today's bar inside the ES, or inside the NQ, could be bar number 7. But bar number 7, you need to close below bar number 3. That level, by the way, bar number 3 right now, the close would be 77.35.25. So you need to see it close below that in order for this 9 count pattern. You can see that the breakout level for the NQ is 75.68.75. That would be the target to the downside. That would be a key support level. So whereas the daily time frame, if I go back here to the daily time frame, we're trading in between a rather large profile, a rather large box out there. We don't need to use that large box to tell us whether or not price is going to move to 73.27. We've got the weekly bottom of its box out here at 77.11. And on the daily time frame, what we have is we've got 75.68. That is the bottom of that's the breakout level for the NQ. So it's really 75.68. That would be a key area to be watching in it. Now, the ES Mini has a TD setup 9-count pattern. The NQ does not. Let's switch back and forth. The Russell 2000 does. The Russell 2000 does as long as price today closes below the close of bar number 5. And that close was, I'm at natural gas. We didn't mean to get to natural gas so quickly. We can go to natural gas, but it would be helpful if Steve-O pulled out the actual Russell 2000. So in the case of the Russell 2000, Friday was bar number 8. Today is very likely going to be bar number 9 inside the Russell 2000, as long as price closes below 1536.80. So more bullish for the Russell to close below 1536.80 today. And this is the interesting pattern. But Friday was the lower low inside the ES and the Russell 2000 by being bar number 8. If there's truly a TD setup 9-count that forms, bar number 8 lows tend to be very significant. Very significant. Be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The show coming to you live this morning between 8 and 9. It's now 8:30 in the morning. And the last two segments where we really took a look and we completely focused on the equity futures contracts out there and those profile levels as we come to the end of a quarter, the end of the month out here. Very important, very helpful, very useful for you and I, engaging areas of support and resistance, what the market is communicating to you and I. We take a look at those larger time frames. It can be a different picture for a quarterly, for a monthly, for a weekly, and the daily chart for the longer term time frames is nothing but noise. For the daily time frame, it is the 30, 60, 90, 3-hour, 4-hour, 5-hour charts that are nothing but noise out there. And that assists you with regard to your longer term investments and what the market's communicating to you and I. So we have a couple of questions that have come in. Let's go to those questions out here. Dow equity futures are up 36 right now. ES mini up 5, NASDAQ up 24, and the Russell up about 2 points. So the first question coming in from Tom. Tom writes in and says, I get the ES day number 9. Let's put the ES mini chart back over here. So I get day number 9. But could it also close lower on the day after bar number 9 and still be considered bullish? Yes. So the TD setup 9 counts, the number you're watching today, I think if I get this correctly. Here's a secondary question. What if it does that and is below support of the oscillator and change line? Is that bearish? Okay, so I'm glad we read the second question. The oscillator and change line, folks, is the green squiggly line, green and red squiggly line on my chart out here. When price is above that level, especially if the line is green, tells us that we have a rising price oscillator above zero. And that's a bullish condition. And price pulling back to test that line is nothing more than a retracement. Now, the line is green out here still, but we can see that price is clearly closed below this level, which has acted as resistance for the last 2 of 5 trading sessions. The close below was September 24th out there. So, Tom, the Stevie's green line, so it tells us our price oscillator is below zero, but that price oscillator is falling, but still it is above its zero threshold. That just says a further retracement and try to identify support out here. But it also tells us if there is a bottom pattern that forms, we must see price then close above Stevie's green line, the oscillator and change line, currently priced at 29.89 out there. So that's the interpretation of the oscillator and change line, so far acting as resistance. Now to your other question. If the ES mini, or if I understand your other question correctly, the ES mini closes above 29.7025 today, there is no TD setup 9 count, period. On my charts tomorrow, if we see the close above that, you will not see counts number 1, 2, 3, 4, 5, 6, 7, 8. It just is a mathematical equation. We're just simply now trading by the numbers, just simply math out there, looking for patterns that have identified tops and bottoms. It's not about selling high and buying low. You don't want to buy low. You'd like to buy a bottom. And so we look for patterns. We look for a beta B equals CD patterns that complete. We look for a TD setup 9 count. We look for wave number 7. We look for the Rhodes momentum indicator, either top or bottom. In this case here, it'd be a bottom. So Tom, any close today below 29.7025 negates the pattern. Now, maybe I also believe to your question, if there is a close below 29.7025 today becomes bar number 9. And of this pattern, that low could form on bar numbers 8, 9, or 10. So in order for this pattern to take hold today, there must be a close below 29.7025. I promise you I won't say that again, I think. But it doesn't mean that today or Friday was the low. It means we have to wait to see how tomorrow plays out. If tomorrow is a lower low, it is still in effect a valid bottoming pattern. But if the following day it's an even lower low, then that pattern gets negated. Hopefully that helps you out with regard to the TD setup 9 count pattern and your questions there, Tom, with regard to it. So we really won't know until tomorrow. What I was pointing out when we were looking at the Russell 2000 was so far Friday's low has been the low, bar number 8, and again, based on some initial visual work that I've done out here, when bar number 8 is either the high or low of that pattern, it typically marks a very strong bottom or top out there. Now, I'm developing software where we could go back and back test that to see if, in fact, that is the case, as well as back test a number of other elements associated with that pattern, just so you and I get enough data to see if there is an edge, because it's really all about using these patterns to help us identify an edge out there. So, Tom, I hope that answers your questions. Thanks for writing in at 8:20 this morning. Phil also writing in at exactly the same time. Great minds must think alike, both at 8:21 this morning. At least that's what my system here shows. And Phil writes in and says, when you finish the ES, the gold contract, which we haven't done in the GDX, so I guess I'm jumping ahead, Phil. I'm looking at Chinese stocks, say using FXI for the group. So FXI, let's come back here to our three different time frames. This is how we begin taking a look at an ETF, a non-future. We could use this also for the futures out here. But here we're going to take a look at FXI, and we're just looking at where price is trading in relationship to its market profiles. Now let's just see what FXI is actually trading at in the pre-market here. So it closed at 39.45. It's trading at 39.88, so about 40 cents higher. Here, if we take a look at its daily, weekly, and I'll get to your full question out here, but just trying to understand where's price trading in relationship to the profiles below the daily level of support. That would have been 40.63. Below the weekly level of support, that would have been 41.48, and into the monthly level of support. So 38.59 is wide open for a test to the downside. Phil goes on to say it looks like a 0.68 pullback on the daily with possibly bar number 8 of the TD setup 9 count. So let's do this. We're going to do the retracement levels on my E-signal charts. They just do a better job color-wise of being able to visually show you what Phil is looking at as far as the retracement. What Phil's doing, he's going from the low of August 14th to the high of September 13th. And if you can see here, he had mentioned that price is traded to the 0.618 retracement level, and that is 39.31 out there. So you can see that that's what it did on Friday. It moved lower with volume. That volume, in essence, if we were ignoring the indices out here, was moving into a breakout area that had 30 million shares, but it was moving lower with 55 million shares. Not exactly how you like to see a level of support hit out there. With regard to the TD setup 9 count pattern out here, and forget today's bar that's showing up out there, look at bar number 9. Phil is absolutely correct that bar number 9 formed on Friday, and that says even if there is a lower low today, which right now in the pre-market that's not the case, that this could be a bottom as well. Now the nice thing about the FXI, Phil, on a daily chart is that it appears that the TD setup 9 count is going to form above its breakout area, which was 38.91. That is generally, I define that as being bullish. That'll be another thing that I'll be able to test for all types of instruments, all types of time frames to see if, in fact, that's what I have visually seen. Over time, price wasn't able to get all the way back to support. That's typically bullish. Nonetheless, 38.91 is a key level of support for the FXI. Now we can see that the FXI formed a nice bottom with that Rhodes momentum indicator bottom signal out there. Now did that back in, let's get the crosshair out here, back on August. The actual confirmation came on August the 17th. So maybe there's an A to B equals CD to the upside. When we get back from this breakout here, we'll make sure that we have properly answered Phil's question for FXI. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. It's 8:42 in the morning if you're listening at the 1:42 time frame. Thanks so much for doing that. We'll be back to the normal programming hour tomorrow on Tuesday. But today's show, the numbers we're looking at, still very applicable to listening in between 1 and 2. So we're taking a look at the FXI for Phil. And Phil's considering a long position inside it because he's seeing a 0.618 retracement from low to high out here. That was hit on Friday. He's seeing a TD setup 9 count that formed on Friday as well. Now, Phil, the one thing that I want you to also anticipate here is that we should see the FXI right now, as price begins trading at 9:30 here, that's going to change. The reason I use 4016, and we had a question about the oscillator and change line in the previous question, so we're also going to take a look at that. Why does Stevie say that price is very likely to bounce higher? Is it because of the TD setup 9 count? No, it's because just a couple of days ago, September 27th, we saw the oscillator and change line change from green to red. Now, what this tells us, it tells us the price oscillator, the difference between two exponential moving averages, 19 and 39 is what I use out there. You can use whatever you're comfortable with. Hint, hint, suggesting 19 and 39. But again, use whichever numbers you would like out there. When this occurs, when I say this, when the price oscillator gets to 0, that's what this change in color is telling us on Stevie's oscillator and change line. The phenomena that occurs is that price and that line catch up to each other. And that is where the real release of information is provided to you, Phil, provided to me, provided to all of us out here. And I can't tell you why it happens. I think that it's nothing more than a counter trend move to determine, especially with the price oscillator below 0, to determine whether it has really shifted to the sellers being in control. Nothing more bullish than a rising price oscillator above 0. Nothing more bearish. Now, take it as a don't like load up the truck, okay? It's just an expression. It is just a metaphor. You still have to use other tools out there to help identify support, resistance, and so forth. But the reality is there's nothing more bearish than a falling price oscillator below 0. That's where we're at right now. So here's the playbook, because I know you're asking me for the playbook. it appears that it could be a bottom. The real answer as to whether it's a bottom or not, because we know price is below the profiles, is price must first take on its first level of resistance. That's going to be the oscillator and change line. As of 8:45, or as of Friday, I should say, that number's at 40.16 out there. So that's what you would be watching. Now, you also mentioned that the EEM is also displaying a similar type pattern out here. Now, in the EEM, Friday was bar number 8. The current bar out here is just because we're so close to the market open, it just re-replicated itself out there. So just kind of ignore it. I can't change it. In this case here, the oscillator and change line is still green. So Friday could have been the low. Today could be the low, depending on where EEM is trading, as well as Tuesday. Remember, that low can occur on bars 8, 9, or the bar following bar 9. So we don't really know here just yet. You've got, and the bar number 9, you have to see where the EEM closes today. As long as the EEM closes below 41.21, then you've got a valid 9-count pattern out here. Has the EEM made a 0.618 retracement? I don't know if that's the case or not, but let's go take a quick peek from low to high out here. The low inside of the EM, to use your retracement levels, I would be using August 14th as a low, and then I would be using the high from September 13th. And no, it's not a 0.618 retracement. Does it need to be a 0.618 retracement? No, it most certainly doesn't. We do know that price is trading below the bottom of its daily profile. So that's 41.18, and that's the level that price must move above, close above, in order for it to generate something other than a counter trend move back up to resistance. Price is trading right into the support level. It was old resistance on the weekly profile, the top of that box being 40.52. That was tested on Friday, and you're in between profiles on the monthly time frame. So back to the EEM out here. You know, one thing, Phil, with regard to the EEM, and I think we can do this live on the show, you know, this also formed a Rhodes Momentum Indicator bottom, had a nice move. It looks like the move from the prior Rhodes Momentum Indicator bottom back in May. Looks like we've gotten about the same type of a price move out there. But what I was going to say with regard to the EEM, this one here, you've got to, you really, well, I think that you should consider what's going on inside of the U.S. dollar index. So let me see if I can find my correlation tool here quickly, just to prove the point, if there is a point. So the point would be, is do we need to be paying attention to the U.S. dollar index and its impact on the emerging markets out here? So now the top panel of my chart is the EEM. The center panel, which shows up as light sweet crude, that's going to be changed to the U.S. dollar index here. Just give me a second to do that. So now we've got the dollar. And now let's take a look at the correlation between the two. And what we're looking for is, now that's a 5-day. And what we're seeing here, so that the 5-day, so when price is above, there we go. So when price is above, when these bars at the bottom, hello, Steve-O. When the bars at the bottom are above zero line, you can kind of see zero, you don't see a line there. It tells you that there's a directional correlation on average over the past 5 trading sessions. When it's below, it tells you there's an inverse. So it looks like the inverses here win. Now, if I take this from 5 days and we go to a 10-day average out here, again, doesn't change anything. It looks like the inverses win. And the real reading, the longer-term reading would be 20 days, and we can see that the inverses really win out here. So what does that mean? That means it's an inverse relationship. So if the U.S. dollar index is moving higher, the emerging markets are moving lower. So the question would be, is the for this trade out here, that's something that Phil may want to consider, is what's going on inside the U.S. dollar index. So to make that determination, I don't know if I have the December contract yet into my symbol signals, and if I don't, which I don't. Sorry, I only have September. I'll change that later on today. Let's go to the continuous contract out here. And so on the continuous contract for a daily time frame, what do we see? So when we take a look at the daily time frame, we don't see any kind of a topping pattern. Let's see, when it made its high, what wave was it in as it made that Rhodes momentum indicator top? Only wave number 6 out here. Today is bar number 4 potential of a TD setup 9 count to the upside. So if there's any caution out here, Phil, for the EEM trade, I would say it has to be the U.S. dollar index. In other words, for the EM to give you a nice bottom, you'd like to see the U.S. dollar index give you a nice top. Now, is it possible that you've got a double top out here? Yeah, it's possible. But we're only seeing strength inside the U.S. dollar index. When I take a look at the daily time frame chart, not weakness. If I look at the weekly time frame chart, what do we see out here? Nothing but strength. Nothing but strength. Price above Stevie's green line. That's the oscillator unchanged line. So that's in bullish mode out here. If I take a look at the monthly time frame chart out here, also in bullish mode, nothing bearish about it. So what is Stevie saying with regard to EM? You know, I like the daily patterns on EM better than FXI, but the US dollar index would have me being mucho grande cautious out there. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com. Welcome back, folks. So it is 8:54 in the morning if you're listening in at the normal time frame. Thanks so much for doing that. We'll be back to normal programming tomorrow. Right now, the equity futures pointed slightly higher. The Dow's up 16, S&P about 2, NASDAQ up 8, and Russell 2000 has turned just slightly red. So we haven't talked about gold. Let's go finish the show off here in the 2-minute drill by taking a look at gold. Gold is testing support. Several levels of support. Let's take a look at them all. You've got the support of its weekly profile. That is 1489.20. The low on the day, 1486.20. Watch 1489.20. It closed below that, suggests a change in trend, a significant change in trend, by the way. Of course, this is a weekly time frame, so really it's going to be Friday that's going to be the key, but still any breach of that level, close below that level, would be a signal. If we take a look at that's the daily time frame, but that's the weekly profile area we're watching. Prices below the bottom of its bullish structured daily profile. That's 1499.50. Another level of support to be watching is going to be where on a daily time frame price had recently no, I take that back. That was a Stevie line. No, I take that is a okay, good. So 1490.70 is the next key level to also be watching in gold. That is the daily support level. Last time that gold broke out, using the TD setup 9-count pattern out there, 1490.70. If price closes below 1490.70, well, now we've got an A to B equals CD that is in play out here. Is it going to be 1-to-1, 1-to-1.27, 1-to-1.618, 1-to-2, 1-to-2.618? I don't have the answer to that out here, but we do know the levels to be watching for gold on a daily basis. Of 1490.70, another key area of support. This 1490-ish area is huge support. So breaking through it is really going to send a signal to everybody out there. If we take a look at the horizontal trading ranges out here, the green lines, which are the ones I want you to focus on, those are the weekly horizontal trading ranges. 1493.80 is its number. Another level of support. This 1490 area, very key support. Hey, I can see if somebody wanted to take a long trade, you're right at support out here. But close below these levels, folks. Gold's headed down for months. Hey, have a terrific day. Stay tuned. Larry Pesavento's up next. I'll see you tomorrow, normal time. Take care.